welcome to episode 97 of
Mo Money,
the Investing Economics Show for Millennials by a Millennial, where our goal is to educate, entertain, and increase the financial literacy for a whole new generation of investors. I'm, of course, the host of the show, MC Mo. You better strap into whatever chair you're sitting in, because this one's going to be a bit longer than usual. Now, let's get to the money. This week, I'm going to be discussing a severe socioeconomic issue that I feel doesn't get enough attention. And although I may not be the best person to talk about it, I'm going to do it anyways. I'm not trying to white-splain anything here, but this is my platform to voice my opinion, so fuck it, I'm just going to do just that. The topic of this episode is going to be about the negative effects of the falling number of black-owned banks in America. The total number of black-owned banks in 2001 was 48. Here we are 18 years later, and the number has decreased by more than half to 19, according to bankblackusa.org. The lack of banks in these communities prevents members of the community from having access to immensely important financial services like depository accounts, mortgages, loans, etc. And when the old banks leave, either large impersonal banks take over or vulture financial firms like payday lenders are left as the last resort. Now, one could argue the fact that a lot of banks failed in this time during the financial crisis and led to a mass consolidation of banks. But that's not the point. So why should we only care about black-owned banks? I mean, all banks matter, right? True, a lot of small communities, in general poor white areas, lost a lot of their community banks as well. I'm not saying that's not important. I am just saying right now the disappearance of black-owned banks is a bigger issue. Alright, so if you've made it this far without being completely turned off, let's get why disappearance is an issue. First, we have to go back to the end of slavery. 1865, Abraham Lincoln passes an act of incorporation for the Freedmen's Saving and Trust Company, a bank created for African American veterans and free slaves. Banks help build communities and wealth, but due to an economic downturn and bad loans, the bank fails and closes in 1874. Stacey Tisdale, financial journalist and CEO of Money Mind Media, did a great explanation of this on The Breakfast Club. Definitely check that out on YouTube and follow her on Twitter, stisdale1. So again, African Americans are stuck in a shitty situation of low social mobility. Fast forward to the early 1900s. Tulsa, Oklahoma, a new state, a new opportunity for African Americans to advance. They create a thriving community called Greenwood, which became known as Black Wall Street. They had banks, shops, schools, every piece of the American pie. Then, May 31st, 1921, the Tulsa race riot breaks out over an alleged assault of a white woman by a black man. You know the bullshit stories. Well, what happened was hardly a riot. It was nothing short of a massacre. White mobs killed hundreds, left 10,000 plus homeless, and destroyed the neighborhoods. The local authorities even dropped bombs to prevent a Negro uprising. John Legend is supposedly working on a miniseries about Black Wall Street, but that was a few years ago and I have not heard anything new. Anyway, these events and a litany of other problems, Jim Crow and other discriminatory policies, have prevented African Americans not only from attaining wealth, but more importantly, preserving it and growing it. Banks are arguably the most important piece of any economy. They are the building block. Without banks, you essentially have no economy. Entrepreneurs go to the bank with an idea for a business. The bank sees potential in the business. They grant the entrepreneur a loan. They go start a business, and bada bing, you have an economy. Now the business grows, they make money, they put that money into the bank. Now in turn the bank has money to lend to other people. More people start businesses, and the community which the bank is in grows and prospers. The more businesses there are, the more jobs, and the more people there are with money. Those people deposit their money in the bank, more money for the bank to lend, and the cycle continues and continues. The more money people have now, they can start buying homes. They go to the thriving bank, they get a loan and buy a home. That's it. That's basic economics. What's the problem? Do African Americans just not understand the simple economics of creating a thriving economy within a community? No. Obviously, that's a ridiculous thing to say. The problem is the lack of access to capital. As I explained, the way to start the ignition to power the engine of an economy is a loan to an entrepreneur. One United is the largest black-owned bank. It has $655 million in assets. But in terms of assets, at $655 million, it's the 1,122nd largest bank in America, compared to JP Morgan with the $2.1 trillion. With a T, Wells Fargo and Bank of America in second and third with $1.7 trillion. In total, black-owned banks have $5 billion in assets. That's it. African Americans are routinely rejected for business loans at higher rates than any other group, upwards of 35%. Because of this, most black entrepreneurs are forced to self-fund their ventures. Some entrepreneurs who fear or anticipate the rejection don't apply for loans at all. The same applies for mortgages. Black ownership of homes increased 0% from 1994 to 2014. 2007 to 2014, percentages of mortgage for African Americans went from 8 to 5%. White people's percentage increased 5%. This is where black-owned banks are so fucking crucial. If me, a white man, is a loan officer at a bank and a black woman walks in asking for a loan to start a beauty supply store for African Americans, most likely I'm not going to approve it. Not because I'm a racist asshole, but because I have no fucking idea about the market for that. But if that same woman goes to a black-owned bank within her community and the loan officer goes, oh, my wife uses that, my mom uses that, my brother uses this, yes, that's it, that's a worthwhile venture, I'll approve the loan. Then boom, that's a new business in the community. The personal relationships created and intimate understanding of their customers is what makes black-owned banks so important. People at Evil, Wells Fargo, JP Morgan, Citigroup, they know nothing about these communities. African American executives make up 2.6% of the top positions at the top 3 banks, and they don't care. The government does not care either. According to the National Black Chamber of Commerce, the Small Business Administration's lending to black businesses decreased from 8% in mid-2008 to 1.8% in 2014. But the good news is, it's not all bad news. Recently, African American consumers reached a buying power of $1.2 trillion. And that's a whole lot of power. The problem with that, only 2 to 3% of that is spent at black-owned businesses. Here's an excerpt of Malcolm X's 1964 speech, Ballot or the Bullet.
We have to become involved in a program of re-education to educate our people into the importance of knowing that when you spend your dollar out of the community in which you live, the community in which you spend your money becomes richer and richer. The community out of which you take your money becomes poorer and poorer.
In Martin Luther King Jr.'s speech, I've Been to the Mountaintop in Memphis, he reiterates those same principles, calling for a boycott of white businesses and called for a bank-in movement to encourage people to move their money to black banks. And money talks the loudest. These ideas weren't anti-white, they were pro-black. They understood the importance of African Americans controlling their destinies by harnessing their financial power. Fast forward to today, these ideas are starting to gain traction again. Killer Mike championed a bank black movement, Angela Rye, Stacey Tisdale again, and many others. After Killer Mike's speech about the movement, black-owned Citizens Trust received 8,000 new depositors in a few days. It's still a long road ahead though. One major hurdle is the convenience of the large banks. If you use Chase or Bank of America and you need cash quick, you can find one close. If you move to cities, there's most likely a branch where you're moving. Black-owned banks are small and cannot offer that luxury. They are not as technologically advanced as other banks, such as having banking online, apps, etc. But until people put their money in, they won't have the funds to grow. But people won't put their money in if they don't have these things. It's a classic chicken and the egg situation. There is no reason not to trust black-owned banks with your money. They're all FDIC insured, meaning if they go under, your money is insured up to $250,000. It only takes a little patience and confidence to turn these banks into some of the largest in the country. But especially with things like money, nobody wants to be the first person through the door. Here's the bottom line. The severity of dwindling numbers of black-owned banks cannot be understated. It's not about segregation, white banks versus black banks. It's about the importance of having banks that understand the community and can fulfill those needs of those in the community that they operate within. The falling numbers of black and other minority-owned banks should be spoken about more, and its correlation to the inability of underprivileged neighborhoods to improve themselves and pull themselves out of poverty. More important than a promise from a politician is the freedom of an individual to work, earn, and grow their wealth. Movements like Bank Black and Buy Black have been more immediate and impactful differences than any policy or any politician ever could. And this episode, I'd just like to shine a light on some people and some organizations such as black-owned banks, One United Bank, Liberty Bank Trust, Citizens Trust, Industrial Bank, Harbor Bank of Maryland, and Carver Federal Savings. Sites with great information about everything I spoke about, blackoutcoalition.org, One United's website, and bankblackusa.org. Follow people on social media like Stacey Tisdale, like I said, MyFab Finance, Tonya Rapley, Desarty Yarnway of Burknell Financial, just to name a few. Thank you so much for watching another episode of Mo Money. You can find new and classic episodes right here on YouTube. For now, don't forget to like, comment, subscribe, share. Follow me on Twitter. Follow me on Instagram. Like me on Facebook.
Mo Money signing out.